Welcome back, everybody. Sive Morten here with the Forex Peace Army.com. Let's take a look again on the euro currency. So, in general, everything goes with the plan that we have discussed. Since market has formed bearish pattern, this bearish engulfing, we suggest that it might be deep retracement to the 1650 area, based on the pattern at least that we have. But some tricky moment that today we have the CPI report. This is first moment. Second, as you know, yesterday was killed one of the Donald Trump closest neighbor, this is Mr. Kirk. So he's actually was one of the founder of the MAGA movement. So this is really a big loss for Donald Trump camp, and that has distorted slightly the overall price performance. So you can see, we'll show a bit later that on the lower time frame downside, some downside tick was on the euro currency, just because some momentum of the safe haven demand has appeared. So it's has changed the shape on the short time frame, but that doesn't break the overall idea. So we just keep watching with the same scenario that we have discussed yesterday. On the daily chart, market is coming closer to the MACD line. It is not yet on it, but I could show you that actually today we could get potentially grabbers or something. So you can see market start flirting with the MACD. Maybe we'll not get anything, but if we will get something, that might be important and interesting for a next step that we will take either on Friday or maybe on next week already. So let's keep watching what will happen. Concerning the CPI, currently market expects something like 29 basis point jump in a month over month change, but in general expectation stands in the range of the 0.25, 0.30 changes in the month-for-month CPI. So actually nobody expects big surprise, especially after yesterday's PPI numbers. That's what about statistics. Now, if we take a look on lower time frames, what we could do today. Here you can see that market mostly stands around the same level as we have expected. We said yesterday that was relatively safe point for taking scalp long position with possible upward bounce. Chances for that stands high. And if you would like to go short, you could try to catch the top of the right arm if you would like to trade on this potential hidden short pattern. And in general, both scenarios has worked, but as I said, with this killing of the Donald Trump team neighbor, as you can see that the upper direction was slightly lower than was suggested. So you can see this sharper reversal happens, despite that previously it was nice upper direction. So it definitely was impact of the political news here. We will cover this in our Telegram channel today. Just some thoughts about this exist, and that might have some consequences for political life inside the United States, as I know that our forum members are actually interested with the domestic politics. We are not dedicating a lot of time to politics because we're mostly economical channel, so dedicated to the markets, but some events, if they are really big, we have to cover. So today we will put some posts on this subject. But anyway, speaking currently on the situation, you can see that it has triggered a slightly early downward action, and currently you probably either have the short position that you have taken here, or you do not have anything. So it is done situation with the long position right here, because it was just short-term intraday trade. Probably if you have taken long, you're already out, either on a break-even stop or at some profit. And since today the CPI, some surprises might happen. So one of them, it might be our prediction on euro currency here if CPI will be, for example, very small. So market easily could form a kind of the upper continuation, either to the 1740 area or maybe even greater, if markets will start making new bets on rate cut, or it will be even more dovish expectation. So since we have here not quite the hand shorts, since you can see that neckline compared to yesterday is a bit steeper, and here is mostly it looks like the wedge, and breakout, upper breakout of the wedge is quite possible. So it means that if you would like to make the bet on this stuff, and you are sure that you would like to take the long position here, your stop probably has to be somewhere below these lows. So it's relatively near standing stop. And if you will be correct, in this case, I would suggest that this might be action to the 1744. So if you'd like to take the short position here, and you suggest this will be downside breakout to the OP, if you do not have the short, I mean for those who do not have any positions. In this case, it would be better to use stop selling order, not the limit order that you're usually taking inside of this range, but stop selling. Why? Because the drop could happen only if the CPI will be high. And in this case, it definitely will be downside breakout. But if CPI will be small and you will take limit order, you will be trapped in wrong direction, while your stop selling order will be untouched. That's the major logic. So here we're discussing just actually direct bet on a data release. This is event trading. So this is not our actually favorite scenario. We prefer to not trade big releases of the data. But since we can currently stand at the edge of this event, we should discuss something that probably might be useful to you. So that and towards actually what we have. Using limit order on the long side, it is acceptable here, because if you will use the stop buying order somewhere above the zero, it will be too far. But here with the long position, you could place very tight stop. That's the major reason why you could use the limit orders. But for the short orders, I mean for long position, but for the bearish orders, I would prefer to, if I would like to trade this, I would prefer to use stop selling order slightly below these lows, maybe, or closer to the moment of the data release. So just sit in the hands and just for 5, maybe 2 minutes, you will see what will happen on the market, and you will choose the points where it better to place the stop sell. So that and towards what we have. In general, technical picture suggests that this might be downside action to the OP targeting 1630 approximately in confluence area on a daily chart. CPI could change this and bring some adjustments. For example, it might be, as I said, upward bounce, but later it's also might be a bit deeper retracement. We will see. How to trade all this stuff we just have discussed. Just decide whether you would like to take part in all this stuff or not. If not, then better to sit on the hands when the CPI will be released, and then we will keep an eye what will happen and make the decision. Most beautiful position for those who have taken shorts yesterday on the top of the potential right arm that we discussed. So that's all for now. See you tomorrow.